Okay, so I really enjoy sharing some of the knowledge that I'm gaining from these investing books because I think everything I'm learning right now is very applicable in today's market. So I'm going to share some gems with you regarding what I've learned from reading Tony Robbins' book, Unshakable, Your Guide to Financial Freedom. I've got a few paragraphs here that I think are relevant to today's market, especially with the news that came out regarding a new variant. Okay, so I'm going to share some knowledge from that book, share some chapters, and then we're going to look into what's actually going on with the new variant. Is it something we should be concerned about? We're also going to take a look at some of Peter Lynch's plays during moments of pessimism, where he experienced a ton of volatility, what he did, and the outcome of how we invested during volatility. And lastly, I'll share with you what I've been buying pretty much during this week of Black Friday sell-offs. All right. So if you gain any value, please make sure you smash that like button. If you're new to the channel, hit that subscribe button and the notification bell if you want to stay up to date with all of my latest video content. Also, if you want to know what I'm buying and selling in real time, if you want access to my research notes, and you also want to join a community of like-minded investors, you can join my Discord group, and the Patreon link is in the description below. So with that said, let's figure out what all of this fear and pessimism is about. So Tony Robbins starts out like this: one of the ways to achieve asymmetric risk reward is to invest in undervalued assets during times of mass pessimism and gloom. Okay, and with that said, we all know right now there's a new COVID variant that's come out, that's been detected from South Africa, that has a high number of mutations, which is raising concerns among scientists and also triggered travel restrictions. So we're seeing it in the UK. They've banned South Africa, and many countries are now enforcing travel restrictions, and also neighboring countries as well. They are bringing in travel restrictions. At the moment, the National Institution for Communicable Diseases, so that's the NICD, they've said they've tested 22 positive cases of the new variant, which is recorded in the country. So again, there's a lot of fear surrounding this new variant. It's called B11529. Again, it's a new mutation, and one of the main concerns, especially on Wall Street, is how effective the vaccine will be with regards to this variant. So current vaccines that we have are based on the original, so the OG, the original coronavirus spike proteins, raising concerns that the new dramatically driven spike protein could render vaccines pretty much less effective. And that's what's caused the sell-off that we saw on Friday. I mean, it was bloody on Friday. If you take a look at the heat chart, I mean, it was pretty much Black Friday sales confirmed. I mean, we've already been experiencing Black Friday sales in the high growth stocks, but I mean, even big tech was absolutely red on Friday, and it's pretty much all across the board. And it's the healthcare sector, ironically. Investors are so gullible, right? They ran towards healthcare as a flight to safety. I mean, Pfizer was up 6% on Friday. Moderna was up 20% on Friday. It's just ridiculous. Okay, so they've just abandoned everything else and ran to healthcare. Again, further discounting big tech and some high quality stocks. Okay, so that's the main fear on Wall Street right now. Would the vaccines be effective? You have this commentary here, which probably fuels even more of the fear and pessimism that it will take a few weeks for us to understand what impacts this variant has on any potential vaccines. Any new variant that is able to evade vaccines or spread faster than the new dominant Delta variant might pose a significant threat as the world emerges from the pandemic. Okay, so this is the fear. Okay, so this is the gloom, this is the pessimism, this is what's causing investors to panic right now on Wall Street, pretty much sell out of high quality positions, further discounting the prices. Okay, so as you will learn in the next chapter, corrections and bear markets can be among the greatest financial gifts of your life. Okay, every crisis creates opportunity. Think back to the financial crisis of 2008, 2009. At the time, it felt like hell on earth, and that's what it feels like right now. Oh, there's a new variant right now. You know, will the vaccines be effective or not? Oh, sell. Pretty much sell. You know, the sky is falling, as Peter Lynch would say. The sky is falling. So yeah, it felt like hell on earth. But if you had the right mindset and your eyes were open, the opportunities were heavenly. And right now, I can say, especially in high growth stocks, the small and mid caps, I mean, the downside right now, we're pretty much almost at rock bottom, if we're not already there. I mean, we've already experienced 2 to 3 weeks of selling off in high growth stocks due to tax loss harvesting. And now you're introducing a new variant. I mean, the opportunities are heavenly. Okay, Heaven. I love that word. Heavenly. Okay. You couldn't move without tripping over a bargain. And again, I go back to high growth stocks and smaller mid caps. Most of them are trading at their 52-week lows or near about their 52-week lows. So, I mean, yeah, there's so much bargains. When the market eventually did hit rock bottom in March 2009, the future looked so bleak to most investors that you could snap up shares in blue chip companies for pennies on the dollar. Okay. And that's the thing, like, you never know when the bottom is reached. You just never really know. But the key thing is, if you know what you own and why you own it, and you love the price at maybe $20 and it's now $10 at its 52-week lows, that's a bargain, okay? And I'm going to show you what Peter Lynch did during a time like that. But before we go into that, there's another quick paragraph from the book. He says, that's why value investors like Warren Buffett lick their chops during bear markets. The turmoil enables them to invest in beaten up stocks at such low prices that the downside is limited and the upside is spectacular. And that's exactly what we're seeing again in small to mid cap stocks that have high quality businesses and tremendous upside as the management continues to execute, allocate capital properly, and drive double digit or maybe triple digit year over year growth. The upside is spectacular. And there's a lot of companies right now where the upside is spectacular. Now, let's take a look at an example from Peter Lynch. Okay, so in 1972, there was a sharp market correction and shares of Taco Bell, now owned by Yum Brands, that's Yum Financial, which also owns KFC and Pizza Hut. So the shares of Taco Bell went from $14 to $1. Okay, it went from $14 to $1. This happened even though the business had no debt, never had a single restaurant closure, and was overall a great business. Peter Lynch began buying at $7 a share. Okay, so it already slashed by 50% from its highs. Okay, so it was down 50%, and Peter Lynch began buying at $7. Okay, horrible timing, by the way. But he didn't stop there. He continued to dollar cost average, so he continued to do so, buying more and more as it continued to decline to $1. A great example of an investor sticking by their conviction. Facts. Okay, stand by your conviction, stand by your research thesis, no matter what Wall Street throws at you, no matter the fear, no matter the pessimism, no matter the gloom and doom. Even if the sky looks like it's falling, stick by your conviction. Okay, by 1978, so 6 years later, okay, it was the largest position in Magellan, at which point it was bought out at $42 by PepsiCo. Okay, taking $7 a share as a starting point, that equates to a 600% return on investment, okay? Although, of course, Lynch's returns would have been much higher than that if he averaged down as the stock declined, which we find out that he did. This historical episode illustrates the kind of bargains that can be found if you shop around for high-quality businesses during market downturns. And this is an incredible lesson that we can all learn from. Okay, so now, what was I buying? Opendoor. Of course, Opendoor is my largest position right now. The stock was trading at $25 just a few weeks ago. And you can see right now there's a lot of fear surrounding iBuying. And all of these support levels have been absolutely destroyed. My average was about $19. It's now $18.57. I just continue to buy at each support level. We're now at the support level of $16.17. If this doesn't hold, which I'm not sure it will, I don't think it will, we're probably going to test support at $13.67, at which point I will continue to buy more and continue to strengthen my position as the price continues to get discounted for me to own more of this incredible company. Now, the funny thing about this scenario that's happening right now is that during the pandemic, during the closures and everything, iBuying companies purchased just 0.3% of homes sold in the fourth quarter of 2020. Okay, so the market share for iBuying during the midst of the pandemic was only 0.3%. But if you take a look at Opendoor's investor presentation, they said that coming out of the pandemic, the COVID-19 actually accelerated the shift in consumer behavior. So customers are prioritizing safety, of course. Customers are also demanding digital-first experiences. Deurbanization is occurring as buyers avoid dense areas. Demand for housing in our markets is strengthening as a result of this pandemic. And coming out of it, you can see iBuyers right now is now responsible for 1.6% of all homes purchased in the US. So think about it. During the pandemic, it was at 0.3%. Coming out of the pandemic, the demand has increased to 1.6%, which is huge, okay? I expect this to drop slightly because, of course, Zillow is now out of the picture. But this opens the door for Opendoor and OfferPad to continue to gain more market share and also to generate a monopoly within this sector. Now, here is the current blueprint or the playbook that Opendoor have set out, okay, which will take them to $50 billion in revenue. All they need is 4% of the market share, okay? 4% of the market share, and if they can get into 100 markets, so in Q3 we were in 44 markets. So if Eric and the team can continue to execute effectively and get to 100 markets, that will put them at a run rate revenue of $50 billion. So that's the plan, that's management's objective. And now compare that to today's price. You can see Opendoor right now is currently trading at 10 billion. That's the current market cap for this company, which is insane. So if Eric can execute on this playbook and generate $50 billion, if we can get to 100 markets, bear in mind we're at 44 markets, then today's price of 10 billion is an absolute steal. Again, know what you own and why you own it. Where is Opendoor going? And this is where we're going, okay? 50 billion. I think today's price of 10 billion is an absolute steal. And as the price continues to get cheaper due to the mass pessimism and fear surrounding iBuying in general, and also now surrounding a new variant, this could get even cheaper. And I'll continue to buy and own more of the company and just essentially watch as Eric continues to deliver on this playbook. So another company that I bought on this weakness is Airbnb. So Airbnb had a record Q3. Now there's a lot of fear again with travel restrictions coming in, and that's one of the reasons why there was additional selling pressure on Airbnb. And it wasn't just Airbnb. Booking.com also got hit. Expedia got hit. I mean, all of the airlines and cruise lines got absolutely destroyed in this pessimism and this fear. But for me, that creates opportunity, and I think long term travel will eventually come back and be strong, as we've already seen in Airbnb's Q3 revenue results. I mean, record revenue, and it was also the company's most profitable quarter ever with net income of $834 million. So this decline here of what, it's now 21% off its peak from when we reported record revenues is an absolute overreaction in my opinion, and it's now nearing my average. I was already buying at 197. I bought some more at 193. I nibbled at 172, and if it drops below my average to 160, 144, yeah, I'm loading the boat. And I'll probably break Airbnb into being one of my top 3 largest positions. So yeah, Airbnb, I'm capitalizing on this pessimism from investors. Another company that I've not really spoken about on this channel yet, but my Discord have access to all of my research, is Big C, okay? BigCommerce. I've been buying this company as well. I'm probably going to do a deep dive video into Big C, which is BigCommerce. Okay. But Q3 was their 7th consecutive record quarter, and the company have been absolutely firing on all cylinders. It's a relatively new company, and as you can see, when they went into the market, they actually traded at $162 a share, but are now trading much lower at $48. Okay, so Big C is a company that I have been buying. I am building into a decent position, but yeah, Big C, definitely put that on your watch list if you haven't already. And also I bought some more Celsius, not heavy. I just nibbled on some Celsius, to be honest. I do think now that this new variant has come in, there's going to be a lot more fear surrounding the supply chain and also more delays at ports, which can feed into Celsius stock price. So it's not yet at my average, but I have been nibbling, and if it does eventually drop below my average at $59, then I'm going to just continue to load the boat, because I think this is just short-term noise. It won't affect the long-term outlook of this business, in my opinion. So that's what I've been up to. Let me know in the comment section below. Are you nervous? Are you scared? Are you panicking, or are you licking your chops like Warren Buffett would, according to Tony Robbins? But yeah, I hope you gained some value. Please make sure you smash the like button if you did. Hit the subscribe button if you're new to the channel, and I'll catch you in the next one. Peace.